Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday, January the 23rd, 2013. We'll be looking at the VIX and the S&P 500 today. Starting off with the VIX, as you guys know, the VIX runs the inverse of the, or the volatility index runs the inverse of the S&P 500. So whenever the S&P 500 is making a massive move to the upside, you should see the VIX making a massive move to the downside, and that's something we've been watching for a while here. We still have this very large unfilled gap between this low point here and this high point here that we'll talk about later as we get closer to it. And we've seen this chart set up a couple times like it was going to turn around. We had a indication here as well as at this point here, but we never got confirmation, so we never got involved in the trade. And now we're pulling down here and setting up like we might be doing it again, but we'll keep an eye on it and see if we get some confirmation. The main thing I want to draw your attention to with the VIX is the fact that you have a bullish divergence forming. You've got this low close point here and this low close point here, and you can see that we're trending down in price activity. Yet corresponding time frame on the ultimate oscillator, you can see the low point here and then the higher low that's forming here. So you can see we're trending up right here. This indicates that the movement to the downside, the momentum to the downside there is actually decreasing, and that means that price is actually overshooting to the downside, and an unsustainable situation will reverse back in the other direction. I believe that will come in play. At the same time, we're going to be filling this gap, and we'll probably see that happen about at the same time we start to see more news on the debt ceiling coming out. So we'll expect that to shift and start to see a move in the VIX moving to the upside. At the same time, you can expect, because the VIX runs the inverse of the S&P, that the S&P will start to break down and move lower. Keep that in mind, because remember back here when we had the political activity going on, we saw a massive move to the upside here, and at the same time period we saw some selling in the S&P, so keep that in mind. Looking now at the SPX, or the S&P 500 Large Cap Index, you can see we're making a massive move here to the upside, but we're now at 57 on the ultimate oscillator. Again, doesn't necessarily mean it has to peak immediately, it just means that you're getting overextended, and I do not believe that purchasing in this time period here is a good idea, because basically the next pullback you get will give you a better entry opportunity than any of these prices. Therefore, it's a waste of time to get involved, and because I'm already out of the long positions in the market, I'm just watching this market and continue to do so. But I want to point out that the VIX running the inverse of the S&P 500 is also indicating that you're getting overextended on the S&P as well. So this is just more indication that you should be cautious here. If you are long, please advance your stop so that when the thing starts to reverse, you're stopped out with a gain, as opposed to making a bad trade and buying at something like this level here and then being out to buy later at this point here. One last item I'm going to bring to your attention will be the NASDAQ, and this particular chart is really bothering me, and it's bothering me a great deal. And I've showed you guys in a longer term picture, and we've basically seen this scenario set up before. We had multiple gaps and rallied to the upside anyway. The thing here that you got to keep in mind is how a chart grows. If it doesn't do it properly, then you start to create problems that are easily wiped away in the future. So the way that this chart is continuing to move to the upside with little blips and moves, you've got this higher high today than you had yesterday, and yet you'll see that the momentum here is actually moving over to the downside, and that would show that there's not really a lot of strength behind this move to the upside. Now I know somebody could point over here that we had the same thing here and we still continue to move to the upside. That's true, and that's something you should think about. Your market can continue to press higher, but the bigger picture shows this high point here is way above these high points here, here, or here, so we're actually still trending down in this overall momentum to the upside, and yet price for the same time period is still trending up. In my opinion, and when I look at this situation, this is a massive situation that I don't want to get involved in. I mean, I was for a little while, I got stopped out at this point here, and I'm out, and I'm good for that. But in the situation we have here, I expect all of this to be erased, and we can kind of get that view anyway from the massive gap that's not been filled here. We also have several behind here and here. So I want to show you one more chart and show you again, whenever we get situations like this, I get really cautious because I've seen this before. Let me show you one right quick. Okay, this is the NASDAQ that I tracked a long time ago, and we had a massive gap here, and a massive gap here, and a massive gap here, and a gap again here. We just continue to form these gaps. We continue to rally higher and higher, and I took note of that a long time ago because it's not proper growth. You don't typically have that. Typically, gaps get filled in relative short order. Maybe not every single one of them, but you don't have a situation where you just have gap, 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 gap. We just keep running and rallying and just forget about them because you're not going to see them again. That's not the way it works. Also, the ultimate oscillator gets excessively overextended at this point here. We just continue to rally to the upside, ignoring the gaps. Well, the reality is, and if you remember your history, you know that this time period was late 2007, just before hitting 2008, when we turned the corner from the uptrend that began a massive downtrend. Am I overly concerned that we're seeing that develop again. It's possible, but right now I just want to bring your attention to the fact that when you have massive gaps in your short-term chart, as we did way back here, it was a warning indication. And a lot of people disagreed with me at that point in time, and I've seen it several times since then where I've pointed it out that whenever you have massive gaps, very large ones, or multiples in place, you should be concerned that something is developing here, and that could be indicating a massive downward move. And so we'll show you that short-term chart again. Here we are again looking at the current time period on the ultimate oscillator, on the NASDAQ, and you can see ultimate oscillator nice and overextended, massive gaps here, meaning rather large ones. Typically these fill very early, and then they're not being filled, and then again we have a small one here that's never been filled, and another nice sized one at this point here at the very start of it. It's not been filled either, and so we're just continuing to still activity to the upside like this. It does concern me, and it's something that I would again stress that everybody be cautious this market. The higher it goes, the less I'm interested. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless. Take care. I'll see you in the next one. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.